is I'm going to bring David in. Now, some of you may have heard of David. David Peltier runs the Stocks Under 10 portfolio for TheStreet.com, RealMoney.com. Dave's been managing that service for the better part of 3 years, and I'll tell you something right now. As a portfolio manager, I don't know anybody else better in the business than David. Okay, I've known David for a couple of years. We got together down in San Diego and watched an Aztecs game a couple of years ago, and just had maybe it was over a year ago, and we just had a fantastic time. David's a great guy. He's been around for a while. He's been a portfolio manager for services for several years. Some of you may or may not know. Prior to Stocks Under 10, he managed Jim Cramer's portfolio, the Action Alerts Plus, for a few years, and had some really great performance. So I'm really happy and really pleased to have David with us. He's a great writer. He does a wonderful job on Twitter. And one thing I want to plug for David real quick before I let him take over here is, David's got some unbelievable charm when it comes to Twitter, and I really enjoy watching him and seeing him go on Twitter. He does these little Twitter chats once a month. I think it's the third Tuesday of the month, or it could be the third Wednesday. But in any event, David does a masterful job talking and tweeting out with everybody, answering questions, putting new ideas out there, and that's what it's all about. David's all about idea generation, and I'm very, very particular and very picky on who I choose to hang out with when it comes to markets and trading and chat. David's one who wants to help people learn. He wants to help people get ahead and move ahead. So not only is he just a great manager, he's a great guy. He does an unbelievable job with Stocks Under 10. And again, I'm really happy to have him here with us today. David, you there?
Yeah, I am, Bob. That's quite the introduction. If I decide to get married again, will you give my best man speech for me?
Absolutely, absolutely. Okay. I'll floor everybody.
Very good. Bob, thank you so much, and thank you everyone for joining us today. It's great to be here and great to speak with everyone. And but Bob exaggerated a little bit, but I really enjoy what I do. I've been at the street here for 11 or almost 12 years now. And when I first started here, I was Jim Cramer's only research assistant, and we've seen so much growth at the company since then. He started the charitable trust and given over $1.5 million away to charity. We started some wonderful products like the Stocks Under 10 product that's helped readers both educate them and make lots of money over the years. And that's currently what I do now. First, I just want to get back to a couple of points that Bob made that really struck me. You talked about that we're not playing tiddlywinks. I think it's really important to remember this, especially for the shorter-term traders out there. I prefer hungry hippos myself, but we're not playing a game here. This is serious stuff. But at the same time, you can be right 60 or 70% of the time, and depending on your bankroll, you can be making billions. But you can be right 60 to 70% of the time with your trades and still be very successful. Remember, this isn't the bomb squad. You have to be able to cut your losses, manage your risk, and for me, as a long-only portfolio manager, that's diversification. And I know Jim Cramer will tell you, whether it's in his books, whether it's his television show, diversification really is the only free lunch out there. If you own 10 stocks, they shouldn't all be 10 tech stocks. They shouldn't be 10 stocks that are all cyclical, that are all risk-on. It's okay to have a few risk-off plays, whether that be a dividend stock or otherwise. So keep that in the back of your mind. If not, have a spreadsheet in front of you so you make sure that you maintain that diversified portfolio. So obviously the Stocks Under 10 space, the low-dollar stock space, it's very volatile. Just take a look at Pandora after hours. This is a stock that was up about 5% during the market session, during the day session. They come out with some bad guidance. Not a huge surprise. And the stock's down 20%, quick, 20% before you can blink. So it's under 8 now after hours. So again, what we like to do, what we try to do at Stocks Under 10 is we're not just trading the hot name. We're not trading Pandora because people know the name, because it's a social media stock. We're digging in there. We got in there at 10 or 11. We were taking a look at it a few months ago, and this was right when the news, when Apple came out. Maybe Apple's coming out with a competing product. So then we go to the balance sheet. Where's their value here? And as opposed to a Groupon or a Zynga, even though I think their business models stink, both those companies have over $1 billion of cash on the balance sheet. So you saw with the Groupon in the past few weeks or so, where some value guys kind of came in and swept in. The stock was trading at less than 2 times cash. So there are a lot of different currents we look at. I think this is good for any stock, but especially these low dollar stocks, because if you blink, they'll move 5 or 10% in one day, or in the case of a Pandora, Groupon almost got a double since the Thanksgiving holiday there. So one stock that I like very much that was very active today, in fact it moved against me a little bit today, is COT. Ticker is COT. Not necessarily a household name. That's because they're in the private label business. COT isn't really their brand. It's a Canadian beverage maker. Competition with like Coke and Pepsi. They sell, their biggest customer is Walmart. Obviously business is going pretty well right now. The stock was up almost 40% year to date going into Monday's close. And that's one of the reasons why you had a brokerage come out and downgrade the stock today. I believe it's Stifel Nicholas. I tend to agree with the downgrade a little bit. In fact, the day after Thanksgiving, that half session, everyone was still in their tryptophan coma. We were trading the stock. We were selling it at about the same place it went out on Monday, somewhere about 850, 860. We were locking in that pretty good gain. The stock was up 40% year to date. But this is where I think being nimble, even though it's a bit of a safer stock, you can still kind of trade this stock. One thing that COT has going for it is dividends. In addition to low dollar stocks, dividends probably one of my favorite aspects of investing. I ran a dividend product here for 5 or 6 years. I don't want to let the cat out of the bag, but you may be seeing a lot more dividend work for me come 2013. So COT recently initiated a dividend. 3% yield. They're going to pay out 6 cents every quarter. Now, this isn't one of those silly special dividends that you're seeing a lot of. And you know, if you see my work on thestreet.com, it's free. We'll talk about it a little bit later. I'm not a big fan of these special dividends whatsoever.